Hey, what's going on, guys? So I have the top 3 technology stocks that I see value in for swing trading in this video. Hopefully you guys enjoy it. Thank you guys for tuning in. Thank you guys for tuning in. I hope you're having a great day. My name is Will Smith with StockMate, and in today's video, I'm very pleased to talk about my top 3 stocks. These stocks are going to be hopefully helpful for you for swing trading. They're all technological stocks. I'm going to break each one down so you can get a feel for how I break down a stock. So hopefully you guys enjoyed this video, and let's just get on my phone now. So we're here on Apple, and we're here on the 1 day. And the first thing that I would say is that it had a negative day today. Obviously, it's down 1.17%. It's Friday. And yeah, you see on the past week, it's up 3%. And then you see an uptrend on the past month. And it's been pushing up for the past 3 months as well. 22.92% profit on the share price increase. And also, look at the 1 year, you see that it kind of got, well, it absolutely got rejected here back in October. And we see it go down quite a bit. And with that, you want to make sure that you wait for that reversal. I've seen this reversal. I've invested in Apple a few times. If we go down to my history, you guys can see I had a stop loss sell, but I profited. So this is just my older activity for buying Apple. So I bought 5 shares at 144 and 4 shares at 153, and then sold my 9 shares at 176. So that's a few $100s profit. And yeah, so I have some experience, investing in Apple. They're the first multi-trillion or trillion-dollar company. So with that, they're a good company. I'm doing my analysis from the Apple iPhone, and overall, I believe in the company. I think they're a great company, but just to believe in them, you also have to look at the company, you have to look at their news, you have to look at their analysis. In this video, I'm just going to do the technical analysis because that's what I've been getting the most questions on. And so yeah, Apple, you see 1 year, we got it rejected here in October and it was making lower lows. Found support here around January 4th. Once it found support, it started to push up, saw some consolidation here, but overall uptrend, and now we are at a sensitive price level of 192. Why is this sensitive? Is because this is where it's previously consolidated and been rejected, and then pushed up more. I mean, overall, this is a support line that it's at, and as you guys know, previous supports act as resistance. So looking at where it's at right now at 192, this is right around where we saw support. And so that could mean that it could get rejected. So, I'm not saying buy the stock right now. What I'm saying is this stock is what I see value in for a swing trade, with the indication that when it breaks above this value of around $194, then I'd be really interested in buying Apple. And, that was the same thing when I was down here and I invested, and I was looking for that break above this previous support. And once it broke above that, then I was really interested in buying, and I actually rode a pretty big swing up here. I sold at 176 as I showed you guys. And so on the 5 year, it makes sense that there's less risk involved as far as if you look at a stock like Nike, because Nike, really quick, if you just go, I'm pretty sure it's 100 most popular, or upcoming earnings, you can see. So here on Nike, had a negative day, and I just did a video yesterday talking about Nike, adding it to your watch list, and I said that it's right here at a previous point where it could have more risk involved in buying it, because it hasn't really been over this point right here of $85 around, right? So today, I had 5% sell off or 6% sell off. So, that is not the case with Apple. What we see on Apple, excuse my typing, pretty terrible. That's just the tip of the iceberg. All right, so when you look at the 5-year, you see that there's a lot more potential for profit than there is risk when it comes down to where the stock's at. So, obviously, it's been pushed up, maybe a little overextended right now. So I'm gonna wait for maybe a pullback like it had today, which was pretty nice. I mean, if you're in it, unfortunately, you lost 1%, but if you're not in it, either way, I think it's gonna be going up. And we're going to see right here if it actually continues up, if it breaks above that 194 price point, then we may see it push up, being conservative around $215 to $220. So that margin for profit of where it's at, so let's say it's at 193. So let's say like 193 to being conservative, that's about 10%. Right? $22 a share, 11.36%. And I think that's being conservative. I think it could continue up past that point, but we need to wait for that break. But yep, guys, that's the one I have my eyes on for this swing trade here in March, the end of March. And hopefully we see it break above that point. I'm going to wait. It's on my watch list, as you can see with this check mark up here. And yeah, so the next stock that we're going to identify is going to be ALGN. So I have a lot of experience trading ALGN actually. I've been trading ALGN for quite a while. So just to look at my recent one, so you can see, I bought at 226 and 231, sold at 243 one share, and then 255. And I think I made around $400 to $500 on that trade. And so when we look at ALGN, you're gonna see that it has an overall uptrend the past 3 months. 37%, which is very attractive to me. And I like to invest in uptrending patterns. You see it got rejected here, so now it's only up 2% on the year. But overall, like, it had a very, very consistent uptrending pattern from when it was inducted into the Stock Market Hall of Fame. No, I'm just kidding. When it was an IPO, since it was a small company, I've been investing in it for a long time, and it's growing exponentially. And then it got rejected quite a bit. Very, very hard sell off, almost $400 a share. I think it was $398 to be exact. $397.85, or yeah, $398.88. And so then you see that it sold off, and then much like Apple, it found support. Now it's uptrending. So what you see here, you see this uptrend, and one thing I would say, we got a pullback here, and that would have been a nice buy to get in. And you see, it pushed up to even more. And this past day, it was selling off aggressively, almost 3%, I think, 3.5% at one point. I'm not in this right now, but looking at the chart alone, it seems like it's very undervalued, and there's a lot more potential for profit than risk in my eyes, and that's why I find it attractive. So when you look at where it was versus where it's at, and the company's like news, you can see, this is a very good company. First of all, they are an orthodontic company. They control, clear braces. They're Invisalign, but they also did manufacturing for SDC, which is Smile Direct Club. So if you guys know what Smile Direct Club is, you probably do if you're on Instagram and you get those influencers that are promoting it. And I promote Instagram. I actually have done some marketing for them before, or not Instagram, Invisalign. And so overall, they're pretty good. They're growing exponentially. You see that they only have 12%, or I think it's 14%, if I'm not mistaken, of the market share in the world. So they're growing a lot. And guys, that's important. So emerging markets represent a significant growth opportunity. 82% buy. Earnings reports. Overall, like, they've been beating their earnings. So you can see the lighter green is the expected earnings per share, and then the darker green is what it actually hits. So it's been exceeding the earnings per share. Overall, great company. I didn't go into the Apple, but it's really the same. Like, it looks about the same. And there's a lot more potential for profit than I think there is risk. And then we see this push up. I'm gonna wait for a pullback like it had today, was pretty good. And then this upcoming week, if I see it break above, like I said, it did break above a good amount of this previous support where it was consolidating right here. So it was consolidating over here, and today, it kind of got rejected when it reached that price point. So it's at 273. We see that here around 277, right? 277. So, you know, it kind of lost quite a bit. It actually broke above that point for a brief period of time over here. But, you know, we've seen previous consolidation and high volatility in this area, and that's where it's at right now. So I'm just going to wait for a break above, I'm going to wait for a break above around 280. With a break above 280, I'd feel confident that it's going to continue up, and we've seen it. We've seen the growth this stock has to offer in the past before it got rejected here back in October. And guys, this is just the second stock. The third stock, going to get into it really quick. You know, this is what I see value in. You don't have to invest in this one only because I see value in it. Don't invest just because I'm saying I think it's going to go up. You know, this is just what I have found based on all the trading I've done for the past few years and my experience profiting using Robinhood and, you know, profiting investing in ALGN. You know, I see this as a very good deal in a potential swing trade. So that's just my opinion. Let's get into the next stock. And this one is Twitter. Twitter is a very prevalent stock. And you can see, you know, I had growth of 6.6%. On past month, that is actually the same. And then you see this growth over the 3 months. Twitter's a little more volatile. But nevertheless, I think that there is upside for Twitter. So looking at where it has been previously, we see that there's support here around and then support here. And, you know, there's resistance about here around $35. You can see that over here and then also over here. And then kind of over here, right around 34.50. And yeah, so where it's at right now, we've seen this price point of where, you know, it's at $33. You know, we've seen this price point of it push up and then go to around $35 or $36. We've seen it get to this price point right here. You know, it's at $33. We've seen it, you know, push up to $33 and then, you know, continue up and then get rejected around that $36 mark. You know, we've seen it right here. And then push up, right? And we've also seen it get rejected each time that it's gone up. So, but there's still about $2 margin for profit. So it's at $33, let's say, right? $33. And, you know, just being conservative, obviously it could push up past this point, but I think Twitter has at least 5% to offer. And, you know, it seems like it's pretty volatile, but I also think that as a technology company, they've been growing quite a bit the past 3 months, and I see that they may make a run. You know, if they were to push up to a point around here, if it were to make this run, being conservative on it, making this run would be around, so we're at $33, you know, it would be around, you know, 30% roughly if it actually pushed up to where it was. So I think that's really attractive. And Twitter has some more to give, I think. And yeah, we'll just have to see, you know, play the swings. And, you know, based on where it's at, it just seems like it has at least 5% to give. And I'm just going to keep a close eye on this one. This one is my last one I mentioned because, you know, I'm not as sure. But I really do think that Twitter has more to give. And, you know, just looking at the 3 month on this uptrending pattern, if we see it push up to where it previously was right around here, you know, that's 17.26%, it's at 13.86%. So roughly around 5%, like I said, or yeah, about 4%, a little less than 4% if it pushes up here. And I do think it will. And we'll just have to see how it goes. And, you know, if you look at the analyst ratings, it's not as solid for the, you know, analyst ratings. The news, it says that, you know, it lags the market, and, you know, it seems like there's a lot of positive growth associated with Twitter, but there's also some things like, you know, Twitter's growth, it decelerates, and, you know, a lot of the you know, I already read this, so the budgeting, a lot of the people are, you know, focusing more on like Facebook and Instagram and stuff, but nevertheless, you know, Twitter is still a huge platform. And as you can see here, like I said, the expected earnings is that lighter green, and you can see the actual EPS, the earnings per share, exceeded that on each quarter. So they're experiencing growth, and there's a lot of, you know, it's low volatility for the most part, but it is more volatile than when you're looking at ALGN or Apple per se. But yeah, hopefully you guys enjoyed this video. That's going to wrap it up. Thank you guys so much for watching, and I hope you got some value from my analysis on these stocks. And it helps you to identify some swing trades. You know, if not trade these stocks, then, you know, identify your own value. And, you know, these are my opinions, so you don't have to invest only based on my opinion. And I just think that these are some ones I wanted to express that I see value in for you guys, because, you know, it's important that I show you guys why I identify a good deal. And I've been able to profit a lot on those stocks specifically in the past. So, you know, I just thought I would share. So hopefully you guys enjoyed this video. I'll see you in my next one. Thank you so much for watching.